Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hour Show. This is the 100th After Hour Show that we have done, and wow, that's quite a bit. And the whole reason why we do this show is for you. So if you do have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show. I'm always happy to do that. No matter what I have planned to do, what's on your mind is top most important. All right. Okay, so with that said, so what actually happened in the market today? Well, we got more uncertainty that was totally injected into the market. The whole world is pulling out of Russia, closing up shop, saying we're done, nothing to do with Russia, our hands are clean. Yeah, so that just causes even more uncertainty because in my lifetime, I have never seen all these corporations, all these public companies pull out of a country. And, I'm sure it happened in World War II, but not in my lifetime. So this is unprecedented. And this just provides even more uncertainty. Because what do you think is going to happen to these companies? Let's just pick one, McDonald's or Visa or MasterCard, when they're not doing business in an entire country. Now, I know it's just one country out of the entire world, but when all of these companies pull out of the country, that's going to hurt their bottom line. And it's for a good cause. Don't get me wrong, but don't let that pass you by. That with these companies shutting off business in Russia, that is going to hurt their bottom line. So when they report their earnings for this particular quarter, that will be reflected. And that's just more uncertainty in the market. And the number one thing that the market cannot stand is uncertainty. The market wants to know what's going to happen next, right? They want to be able to flip the page in the book and have an understanding of what's written on that next page. And right now, that page is pretty much blank because of everything that's happening, right? With gas prices going up, with the president of the U.S. saying that, we're not going to take in basically an embargo on oil and gas from Russia, that's going to cause prices to go up for everything, like we talked about yesterday. So just a lot of uncertainty got injected into the market today, and that's the one thing the market cannot stand. So hopefully you are able to position yourself, at least with your trading part of your portfolio, and take advantage of the market going down like we've talked about over and over and over again for like 2 weeks straight during this fall right here at the end of January, this fall right here in the middle of February. If you're not taking advantage of those ETNs, you are missing money, you're leaving money on the table, or you're just flat out losing money. So make sure you're taking advantage of those. Number one, you have SDOW. If you want to short the Dow, the 30 stocks in the Dow, you can use this ETN right here. It's basically an inverted and leveraged way to short the Dow, the entire indice, all 30 stocks, without having to worry about doing different options. It's very clean. It's just like buying an ETF, right? You go in, you buy a share. If the market goes down, at least for your trading portfolio that you have, if you do have a trading portfolio, then you can go in and trade this and make money while the market is going down. And if you want to short the S&P 500 without going through a bunch of options, then just go with the SPXS. This is the direction daily S&P 500. It is leveraged by 3x, 3 times. So if the market goes down by 1%, this goes up by 3%. Really straightforward. We've been using these since the end of January, middle of January, and it's been working really well, right? So I hope you're taking advantage of these. There are a ton of them out there. I like the direction ones because they're just completely inverted. and they're leveraged, right? So be careful with leveraged ones though, because if the market does flip, like today was a seesaw, right? The market went up, the market went down, and we just, weren't sure which way the market was going to go. So just do be careful with that. You can lose money, but you can make money in this down market. And if I go into the 5-minute view here for the S&P 500 to demonstrate the seesaw effect that we had today, I mean, look at this. We ended yesterday, of course, down big. And then what did we do to start the day? We started the day by falling, right? We fell until 10:35 a.m. Eastern time. And then there was a rally, got almost back up to the yellow box, but not quite. And then it fell again. And then 11:35, an hour later, we go into this big rally. And this was a big rally all the way up to the top here at 1:10 p.m. And then that was it. We went down, tried to rally again, but then went down. Now, one thing that I pointed out yesterday, and I'll point it out here again today, is the past 3 sessions have all ended with the last 5 minutes of trading with major volumes of buying. Yesterday's volume of buying in the last 5 minutes was the biggest that I have seen in at least 5 sessions. It was pretty big. And that was also a down session 5 sessions ago. So today, last 5 minutes of trading, a lot of buying was done. This volume candle here for the last 5 minutes is just as big. What does the yellow box represent? The yellow box, and let me go back here to the daily view. The yellow box was my price target for how far I thought the S&P was going to go down, and we set this up back here around January 24th when it first tapped this box back here. And it's between 4,300 and 4,200 on the S&P 500. So that's what the yellow box is down there. And then the yellow box up top, that's where resistance is at. And that's right around, let's see here, 45.90 for the S&P 500. That's resistance. Back here on February the 2nd, and then again on February the 9th, it couldn't break above it. So that's resistance. And then the bottom yellow box is where I thought we were going. We ended up getting there, but we're sinking lower. And unfortunately, if we continue to sink lower, the next area of support isn't really until we get down around 4,100. And then if we break 4,100, then that's when it really gets bad. If 4,100 on the S&P 500 cannot hold, then we're going all the way down to maybe 3,800. That's where the next line would be. And let me go ahead and put that line on here right now. It looks like it's going to be right around 38.70. That would be the next area of support. So if the S&P continues to fall, we've got 4,100 marked as support. And if it breaks 4,100, boy, oh boy, is it going to go further. 38.80 is what I have there, or 70, 38.70. So there's a big drop after 4,100. If it goes that far, there's a good chance. I know there's a ton of uncertainty in the market right now. And just more uncertainty was interjected into the market today. But maybe when we get to March 16th next week, thank you for your insight. How do you determine these levels? You're welcome, by the way. You are totally welcome. When you go back and look, let's use this 38.80 that I just did here. When we go back and look at retracements, where the market has come before us, right? You look for areas that have a lot of reactions. So here at 3870, we've got a bunch of reactions on that line. And then if we look here from 4100, which is right here, okay, 4100 right there, and just, oh, that blends in. I'll go back to the blue. All right, so from 4100 there, and if we go down, there's no support. It was just a rally all the way down until 3870 right there, 3880 in there. So there was no support in this rally right here. It was just straight up and to the right on the chart. But now that we have this area where we've got it connecting right here, having a reaction, another reaction right here, a whole bunch of reactions right here, a reaction here on that line, and then a few actions right here on the line. This is what you're looking for when you're finding areas of support resistance on the chart. You want reaction points. So that's why at 3870, maybe up to 3880, in between there, that 10 digit gap, there's a lot of reactions right there on the chart. So that's where I get the number from to use. So as we go back to where we are today on the chart, I can say with pretty good confidence that if we break 4100, then the next area of support is going to be at 3870, because that's where we have all those reactions on the chart. And then in between 4100 down to 3870, there's no reaction. It's just a straight rally. So that's where the lines come from. The same thing applies for trend lines on the chart. For example, with the trend line that I have here that is acting as resistance, this purple line that is coming down, let me make it a little bit bigger so it's more noticeable. This big purple line right here, we've got a reaction here at the top, and then another reaction right here, and then this reaction. So we have all of these points right here lining up on this trend line. So we know that this trend line right here is a resistance line, because every time the market has tried to go back up and break through that point, it was rejected at that point. So we're making these lower highs on the S&P 500, meaning that we are in a downtrend. And the S&P 500 is technically in a correction right now because it's down 12.9% year to date. But from this high that was made on January the 5th, it's down over 10% from that mark. So that's what you're looking for, whether you're looking at lines of support or resistance, or you're looking at trend lines. They can be descending, they can be ascending, either way. Let's see here. So would it be wise to buy the inverse ETNs on the reaction points? Yes, it would be. Yes, it would be. Now, I would say that there's one little asterisk to put there. The March 16th time, that could lead to something different. It could. So if, for example, the S&P 500 decided that it is going to rally over the next few days until we get to the 16th, March 16th, it could get, up there close to that point, and then we get good news, or we get news that we know the 25 basis point rate hike, and it's beginning in March. The market could take that as, okay, now we have a certainty in the market. We know what the Fed's going to do next. And especially if the Fed came out and laid out a plan, that could give a little incentive for the market to rally, and it could break through this resistance line. That's the only variable that I would put into the equation for this resistance line right here and buying the ETNs. So I hope that made sense. Right now, the market's heading down. And buying off of these reaction points here for an inverse ETN, like the SPXS for the S&P 500, has worked out. But this one little wild card here with the Fed FOMC meeting, that one would maybe make me pause if for some reason the market rallied and it got to this resistance line on this day, or the market rallies after this point and then we get to that line. This one is a question mark, right? It's also a possibility that the market just keeps going down. And I would say that if we broke this 4,100 area, then I really do not see a high probability that the market isn't going to continue going down to the 3870 mark. So that's one too. If it broke this line right here, then I really do believe that it's going to go much further to this point. And I'll leave these marks here on the chart over the next few days so we can see what happens and plays out. All right, let's just change that to red. This is down. All right, so if it does break the 4,100, then there's a high probability it's going to continue. I do believe that. That's how I am setting up for this. If it breaks that 4,100 area, I am definitely going to go a little bit more heavy into the ETNs because they've been working really nice all year long so far. All right, so there's that. The Fed meeting on March 16th, definitely mark that on your calendar. The Fed won't come out until the afternoon, maybe around 2 p.m. Eastern. They'll have a press release, and then about 30 minutes after the press release, then Jerome Powell will come out and he'll give his little conference, basically saying what's in the press release. He'll answer some questions, but that is going to be a very important time frame for the market because it may give the market a little relief so it could rally afterwards. But it's a possibility. It's up there. It's not a given though. But yeah, that's my plan. I'm in the ETNs right now, 100% with my trading portion of my portfolio, and it was a little. I almost flipped to going with longs because you can also do that with a leveraged ETN. So when the market's going up, if the market went up by 1%, then you'd get 3% on the day. So it's an interesting thing to use, and there are a bunch of them out there. not just for the main indices. There's a bunch out there for specific themes and all kinds of stuff. So, for example, if you wanted to go long on the S&P 500, like if the S&P 500 was rallying, you would use the SPXL, which is the direction daily S&P 500 bull 3x shares. So if the market is rallying, then you can hop into one of these. You don't have to worry about options trading because it doesn't matter. It's a lot easier. And you're just basically buying an ETN, which is just like buying an ETF, except an ETN is linked directly to something. It's not just a basket of different stocks. So this is if you were going to go long on the S&P 500. If it was rallying, then you'd go into the SPXL as the ticker symbol there. Let me just put that here. All right, so the ticker symbol there is SPXL, and if the S&P 500 is rallying and going up, then that's the one you'd want to hold. So when you're in a bull market, like from March of 2020 and this whole ride up, last year the S&P 500 made 28%. Well, if you were in this and you held that for the 28%, just rounding up to 30%, then you'd have, 90% gains in your account instead of, the 30%. So they're real fun to use. You do have to be careful, and definitely don't forget the wash rule, meaning if you sell for a loss, you cannot buy back in until 30 days later. So just be careful about that if you're going back and forth between ups and downs in the market using these specifically. Now, if you sell on a gain, you can get right back in whenever you want. But if you sell on a loss, you do have to wait 30 days before you can get back in. Otherwise, the wash rule comes into play, and they can tax you more for it. So just be careful with that. But they're definitely fun to use. Definitely fun to use. Okay, let's just hop right back into it. So over here on the SPX. All right, so let's see here. I was talking about uncertainty, a lot of uncertainty. Companies coming out of Russia. Okay, just getting my thoughts back together. All right, so today with the market, stocks, we all know it was a very choppy session. We saw that on the 5-minute chart here. We talked about the swings that happened in the market today. We can see it right there. I mean, wild swings, and it was all moving on different headline news, right? President Biden came out and talked, that moved the market. Zelensky came out and talked, that moved the market. Russia came out and said that, well, since you guys aren't going to buy oil from us, then we're not going to send you other resources until the end of the year, December 31st. So that moved the market. So whenever there was a headline about something happening because of the war, that moved the markets. So it was just complete confusion in the markets today, and that's what drove this seesaw pattern. It was all based off of headlines. So this morning, I'm coming into the market ahead of the game because I'm already in the ETNs. I've been in the ETNs for a while, so as the market is selling off, I'm making gains. And then when we hit this bottom right here, and it was this double bottom for intraday, right? This double bottom here, and then we flipped and started to rally. I almost said to myself, you know what? Oh, should I take my gains and then go long? And I thought about it and I was like, no, this is headline driven. This is headline driven. There no fundamentals changed in the market. The economy is still getting weaker. Gas prices are still getting higher. But during this time, oil prices started to go down for the day. So it was a very confusing day. And a lot of times when it's confusing like that, the best thing to do is just to turn it off and walk away. Because at the end of the day, I ended up in a better position just doing nothing than by doing something because of the headlines moving the market. So that's the point I wanted to get across. Another lesson learned, right? Sometimes the best thing that you can do in the market is nothing, and you'll end up better off because of that. So don't let the headline news trick you into doing something. Trick's the wrong word because they're not trying to be deceitful for the most part, I guess. But sometimes you just got to turn it off and walk away and take a deep breath. Everything's okay. Uh, and you know what? That worked out today. And if the rally kicked off, well, I would have lost some gains, and then I would have hopped back in with the rally even stronger than it was at this intraday part. So just a lesson learned. Turn it off, walk away, take a deep breath. Everything's okay. Just and just do that sometimes, and it works out pretty well for you. Okay, now with the Russia invasion of Ukraine and the consequence about the commodity prices rising. That fueled a whole bunch of headlines today about a slowdown in global economic growth. And I believe that's coming. I believe that's already happening. I believe the independent growth here in America is already slowing. And I think that the global economic world together, it is slowing. Growth is slowing. We saw that with a bunch of earnings that came out. Even recent earnings came out. Growth is slowing. So that's something to keep and write it down right beside your thesis for the market. Because remember, your thesis on the market, your hypothesis, what you think the market's going to do, that always has to be fluid and changing, evolving as market conditions change. So keep that in mind. Okay, the main, I guess I would say, the main Wall Street mover today must have been President Biden, right? Whether up or down, that was the main, what you see here on the screen, the main rally and the main fall today. It was around that speech. And President Biden is putting a ban on imports of Russian oil. Now, the move that threatens supply chains and strengthens further inflationary pressures on the economy is this move. By putting an embargo on Russian oil, that causes inflation to go up and that causes harm to the economy. Definitely. And there's nothing that can be done about that. But like I said yesterday, just because Russia is attacking Ukraine, and my heart goes out to everyone in Ukraine, my family and I, every night before the kids go to bed, we say a prayer for the people of Ukraine. We can't lose sight of our compassion for the people of Russia either. The sanctions, the embargoes, the bans, the companies pulling out, it's not just hurting Putin, right? Right now, it's definitely not hurting Putin. But what it is doing, and it is hurting the Russian people. Many of who they just want to live their lives. They just want to, get up, go to work, play with their kids, have dinner with the family around the table, and then go to bed, get up and do it again. So we can't lose the sight of our compassion for the Russian people either. Now, I'm not saying that sanctions or what we're doing shouldn't be done. I'm just saying we can't lose sight of our compassion. We can't just make everything ones and zeros. All right. So in today's market, after giving up 585 points in the session, the Dow actually closed 185 points lower today, and the S&P 500, it finished the day down 0.72%. You can see that right here on the right-hand side. And that's what I was talking about with the market. Sometimes it's best to turn it off, walk away, take a deep breath, and say everything's okay, and you'll end up better off, because that's what today was. The Nasdaq, it fell 0.3%, but the one thing that was good today was the Russell 2000 small caps. Okay, the Russell 2000 actually finished 0.6% higher. So that was a good thing in the market today. Now, of course, soaring crude oil prices, that just lifted energy shares up. Chevron was up 5.1%, booking big old gains on Chevron. Also, higher crude prices carried the renewable energy sector higher. Enphase Energy, which is one of my long-term holdings, ENPH is the ticker symbol for Enphase. I love this company. They were up over 10%. What did they end up with? 10.8? Yep, 10.82 today. And they've been in a rally. They had a big gap up because of their earnings. They were really good. And then a sell-off. But since February the 24th and January the 24th and February the 24th, that's been the two lows in the market so far. But Enphase has been rallying since then. So alternative energy is getting a big boost as oil prices also go up. So don't forget about the plays like this. We talked about Next Era Energy yesterday on the show, and look at Enphase Energy. This one has been, really, since the low here on January the 24th, it has been in a rally. You could have traded around its earnings and then bought back in sometime on the way down and had a second rally. That could have been a possible play. SunPower is another one that was up 18.7% today. So don't forget about your solar alternative energy stocks, because there are several that are moving as oil prices go up. But don't forget, they could get stretched a little bit if oil prices start to decline at a rapid pace. These could too. So just be careful about that. Keep that in the back of your mind with your trading plan. Okay, 9 of the 11 sectors in the S&P 500, they did close lower today, including, and this is why I thought that potentially a turnaround in the market may have happened this morning. It didn't, though, but could have. And that's because defensive plays like consumer staples, that was down 2.6%. Healthcare, that was down 2.1%. And utilities, that was down 1.6%. Those were the three at the bottom of the list today. And those three are your defensive plays. Utilities, that's where you go when typically the old school trading plan is that when the market is down, you go into utilities. You go into healthcare services or equipment. and that's a good place to put your money. But of course, nowadays we've got ETNs that we can use, which are even better in down markets. But those defensive plays were down today, and they've been up. Utilities was one of the only ones outside of energy that was up yesterday, but it's down today. So that on top of that one little burst of rally that we had intraday today, I thought maybe that the cycle, the short-term cycle was changing a little bit, and maybe we could have ended the day in the green, but that's not what happened. Now, energy, of course, was up 1.4%, and consumer discretionary was up a tenth of a percent. So it barely got out of there. But those are the two that ended higher. Now, the stock market did struggle out of the gate this morning, like I showed you on the 5-minute on the S&P 500, as oil prices flirted with $130 a barrel. That is big. In anticipation of the U.S. banning energy imports from Russia, which they did. Now, on a related note, the UK and the EU, both of them said that they would phase out Russian energy imports this year. But the UK said that it's still exploring its options for natural gas, because natural gas is a big import for the UK from Russia, and they can't just turn that off all of a sudden. So they've got to try to find alternatives. One great alternative is if Biden would let the U.S. start producing more. And I know Biden kind of wagged his finger and told corporations to stop price gouging and produce more. But while some of that is true, I might call that mostly true, or maybe 50-50. There's a lot of regulation. Look at the Keystone XL pipeline. Mr. Biden turned that back on. That would help to lower fuel prices for Americans, and it wouldn't cause the price of gasoline to go up as high. So there are things that the president could do that he is not doing. So just, keep an eye on that. Watch that stuff. But soon after President Biden announced the ban on Russia oil, stocks carved out a bottom and then rallied to session highs amid a report indicating that Ukraine was no longer insisting on NATO membership. Now, again, like I said earlier, the news headlines, that's what moved today's market, right? This headline, I saw conflicting reports. Was this an old story about Zelensky not wanting to be part of NATO anymore? Ukraine not being part of NATO anymore? I don't know, but there was conflicting reports about that as I was trying to dig deeper on this story. But you got to be careful. The S&P 500, it actually went from a 0.7% intraday decline to a 1.8% intraday gain. So it was a big shift today, and I showed you on the 5-minute chart for the S&P 500 that big rally that occurred late morning. There it is, right there, into that yellow box. Now, crude futures, they paired some gains today, and they ended up settling to end the day at $123.76 a barrel, up 3.8%. Now, the rally off the lows was likely driven by short covering activity from investors caught totally off guard by the market's sell the rumor, buy the fact response, which is something a bit comical because that's not normally how the cycle goes. Unfortunately, the gains did not last long because the market turned negative after reports indicated that President Putin was going to ban the export of certain products and raw materials from the Russian Federation, like I said, until the end of the year, December the 31st. So the volatility price action, it frustrated investors today. But at least the Treasury market did communicate a more consistent message through its steady rise in yields. Namely, the Russia Ukraine situation is expected to exacerbate inflationary pressures and keep supply chain disruptions at a high. And keep adding those ands there, it will force the Fed to react with tighter monetary policy, which again, that March 16th day is a very important time frame on our charts. So we have to, whatever strategy we're going to put in play, we have to keep that March 16th, this purple line up here, vertical line, that's the day. We have to keep that day in our strategy, okay? Now, the 2-year rose 9 basis points to end the day at 1.63%, and the 10-year rose by 12 basis points to 1.87%. Now, in the economic arena, we got the trade deficit report today. And the trade deficit for the U.S., it widened in January to $89.7 billion. Now, this was the third straight month of widening deficit, which underscores a weakening trade activity related to, of course, Omicron variant and the ongoing supply chain disruptions. In the same period a year ago, the trade deficit was at $65.1 billion. So it's popped another $20 billion in a year. And that just goes to show the slowdown here at home. Okay, tomorrow investors will get the JOLTS, the job openings report for January, and the weekly MBA mortgage applications index also. So that's a couple things to watch out for tomorrow. And then, of course, Thursday, we get our inflation reading, right? Oh boy. Okay, it's Tuesday. I thought, oh my gosh, is today Wednesday? No, I don't know why I had that thought, but I did. All right, here's where we stand year to date. The Dow Jones, it's down 10.2% year to date. This is the first time the Dow has been in a double-digit loss year to date. So that's something. The S&P 500 is down 12.5% year to date. The Russell 2000, it's down 12.6% year to date. And the NASDAQ is down 18.2% year to date. Now, gold, it was up another 2.55% today. It got up to 2049, I believe is where it closed at today. Now, let's pull up gold here for just a quick moment. All right, so right now, the second, see, gold doesn't operate in the typical fashion. It's a commodity, so it's constantly moving, similar to Bitcoin, right? So gold is at 2049 right now, almost flat because the new day started as when the markets end, and it goes 24 hours, just like Bitcoin. So nice big gain again today, 2.66% is what I have here on TradingView for today's game. It's up 12.05% year to date, so it's been moving good. Now, there are a couple ways to get in on the gold trade, okay? Some easy ways. One of the easiest ways to get into gold, and be careful of FOMO here, fear of missing out. But GLD is the ticker symbol. This is an ETF. It's the Spider Gold Trust. Now, this ETF is the most liquid gold ETF that's out there. So it's got a lot of capital. It's really well funded. Now, if you really believe in gold rallying, there's another ETN that I have for you, and I love ETNs. I use them all the time, and like I said, there's an ETN out there for almost anything, bull or bearish. So whether it's going up or going down, you can literally almost find it. Um, Sorry about that noise. I don't even know where that came from. So this one is NUGT, like nugget. This is the Direction Daily Gold Miners Index Bull 2X shares. Okay. So this one is moving along with gold miners, and it's leveraged 2 times, right? So today it was up 1.1%. Yesterday it was up 5.3. The day before that it was up 7.9. So this is an ETN that you can use if you are still bullish on gold miners in particular. Just another example of one of those out there that's a leveraged account that you can use. But do be careful. Don't FOMO into it. Now, if you think that, well, at some point, our oil situation, it will reverse at some point. I don't know when that point is, but when it does, I want you to get into, gotta spell it right. I want you to get into DRIP. All right. This is the Direction Daily S&P Oil and Gas Exploration and Production Bear 2X shares. Now, when the oil market turns around, right, and it's starting to come down, this is where I want you to go. So you can make money while the market is going down, right? So right now, this is going down because the oil market is going up. But at some point, that up is going to turn to a coming back down, a cooling off period. So just keep DRIP, the ticker symbol, DRIP, in the back of your mind. It's another leveraged and inverse account there. So just keep those in the back of your mind for the future. They'll come in handy. Um, uh, that's why you need a war to cover things up. Oh boy. Oh boy. Yeah, it's unfortunate, isn't it? It is totally. A person could diversify and put a third of the trading funds in 3 leveraged ETNs. Yes. It's another way to also hedge without using the options market as well. So um, you can use the ETNs, the inverse accounts to hedge whatever you have going on. If you're long for the S&P, you can go short on it using an inverse ETN, and it'll work out for you. Um, so, yeah, that's an excellent point there, David, that you could do that. Absolutely. So just keep these ETNs and stuff in the back of your mind because they do work. They have their situations where they are definitely worth using. Okay, last time I checked, Bitcoin was up today, and it still is up 1.8%, 38,683 at this point. It's had its seesaw moments here over the month of March so far, riding up on February the 28th, last Monday, and then coming back down. And it's kind of holding its ground over the past few days here. So, we'll just see where it goes. It was kind of ticking up as the war began. It's been falling. I'm not sure. I think people were kind of thinking that because when the war began, maybe Bitcoin was going up a little bit. That maybe people thought that, oh, now Bitcoin's finally found its utility. I don't know. I don't know. I believe in Bitcoin long term. I hold Bitcoin, but we all know it's down 16.3% year to date. It's performing like the rest of the market, and so that's not very good. Uh, Ethereum ETHUSD on TradingView, it's up 3.3. It's still having these bigger percentage swings than Bitcoin, but it is down more than Bitcoin year to date. It's down nearly 30% year to date. Uh, Compared to Bitcoin's. It's just incredible. But Ethereum is at 2576 right now. All right. So now we talked about that. Let's talk about a particular stock, Petco Health and Wellness. They actually produced some pretty good earnings today that were pretty impressive. Now, I talked about this during Sunday's Catalyst Watch video. You know, it's been in a downtrend defined here. It's got a down trending trading channel that's been in. And even though it was up 8% today, it still did not break out of this channel. So it is very possible that even though it had a good earnings report today, I mean, it could have a sell off tomorrow since it's getting to the top and it's getting near resistance. So do be careful with it. But maybe, especially if you're a pet lover, to keep this one on your radar for when the market does finally turn around. So let me tell you what I saw in the report here uh, for Petco. So, with it being up 8%, it looks quite fetching today, right? Following the company's, and I would say, a very robust same store sales growth. And this was their Q4 earnings report. They also provided upbeat fiscal year 23 guidance. Now, the pet retailer also eked out a slight earnings beat for the quarter, keeping alive a streak that it has maintained since its IPO, right? It has not lost it since its IPO, which isn't very long because it IPO'd late last year. If I go and pull the chart in a little bit, you'll see that. I mean, it had a pretty wild ride when it IPO'd. I mean, look at that. Man, that's an IPO that really didn't work out too well. A lot of selling going into April timeframe, March of last year. But anyways, back to its report. So Petco's Q4 same store sales, that was up 14%, and it also extended another streak of double-digit comparison growth to 7 straight quarters. So it's growing at a good pace. Now, comparisons were helped by a variety of factors, including excellent customer growth. Now in Q4, Petco added nearly 800,000 net new customers, and that brings up their total active customer count to 24.1 million. So that is a really good sign there. You know, during the pandemic, people were buying pets like crazy, and those pets need to be taken care of. And that's a place like Petco, I think. Now, higher spending per customer is also driving Petco's same store sales growth. Also in Q4, uh, the continued climb upwards also points to strengthening trends among the younger generation, which is interesting. A lot of them bought pets as well. Now, Petco continues to grow its digital offerings, which is really great. Seeing online sales jump by, I had to double check, 143% on a 2-year stack. So really good growth there. Now, even before the pandemic fueled a major leap in digital sales for them, this aspect of many retailers' business was already a focal point, going digital, getting more digital sales. And the reasoning behind bolstering digital features is that consumers are more likely to increase their spending when they are buying digitally, right? Because they can't put it in a shopping cart and uh, mentally see a shopping cart is full. So you keep adding things to your digital shopping cart. Um, so if you're a consumer, be careful of that little trick that they use when you can't physically see that your shopping cart is full, right? Um, Another thing, Petco has it has continued enhancing its digital capabilities, and that is mainly due to fierce competition pressure. And there's other pet online stores like Chewy.com, ticker symbol is CHWY, and Fresh Pet, FRPT is their ticker symbol. Now, Petco's physical presence, I think, leaves it better positioned to capture further market share from those only online retailers, as delays in shipping can force consumers to pick up certain pet foods and supplies at a nearby location. Now, once supply chains, if they ever do, get fixed or smoothed out, then maybe um, my thoughts on that might change or evolve a little bit as the environment evolves. But right now, if you need pet food and the pet online digital store can't get it to you in time, then you're going to go to a physical location to get that pet food. So that's why I think right now Petco has got a bit of an advantage, especially over Chewy, in that regard. Now, over the past year, transportation costs and delays, whether in shipping out finished products or receiving certain inputs, have been challenging for Chewy and for Fresh Pet. For example, in December, Chewy did mention how elevated inbound freight costs are impacting the flow of shipments across the country. Likewise, last month, Freshpet, when they reported, they commented that it had to delay growth and increase production uh, to meet demand to fulfill inventory gaps created during 2020 and 2021. So they're still looking in their rearview mirror, not looking ahead for growth. Now, looking ahead for growth, Petco capped off a great quarter with an upbeat fiscal year 23 guidance. The company expects EPS of around 97 cents to $1 and revenue of 6.15 to 6.25 billion dollars, both nicely ahead of estimates. Now, playbook on this. Petco has seen its shares of struggles throughout the years, but the company finished this year strong, posting solid results in Q4. With pet ownership rates soaring 67% in 2021 through 2022 from 2019, and this is according to the American Pet Products Association, or APPA. Petco should continue to benefit from strong trends going forward, and the company also has plenty of catalysts on the horizon to help get its shares back on the right track after our market environment kind of shifts. Those include um, giving up about a 13% over the next 6 months. Well, I'm saying that backwards. It has lost about 13% in the last 6 months. It should gain that back with these catalysts. And they include pharmaceutical services, which experienced a 66% year over year growth in Q4, veterinary support, and then pet grooming services. And again, those are just a few of the catalysts that Petco has in their horizon or on their horizon. So yeah, that's Petco. That's what I think about their earnings report. It was pretty good. What do you think? You think Petco and their locations are beneficial right now with the supply chain mess ups that we have? Or do you think having physical locations are just going to be a hindrance to future growth where, Chewy.com doesn't have those locations to worry with? What do you think? Let me know down in the comments. All right. Well, that's what I wanted to talk about today. So we got through that. We got through your questions. And we've been going here now an hour or so. So I guess I'll go ahead and wrap up this live stream if you don't have any more questions. If you could, click the like button. That lets YouTube know you thought this video was helpful, useful, actionable. Take the URL and share it. That lets other people know that you found information in this video to be helpful as well. And then click that first link in the description to beat the markets with us this year. Our Petco is the nearby mini mall is always busy. That's good observation there, David. Because here we don't own a pet in our situation because we're looking to buy a home. I know, perfect time to have to buy a home. But we've noticed that too. The Petco here in Northern Virginia, and there's a few of them around, they always have people in them. Always. They're always busy. And I really think those physical locations are a benefit to Petco right now over a Chewy.com. So yeah, I'm glad to see you made the same observation. Oh, that's cool. Glad to hear that. All right, so I'll go ahead and wrap up this video. No other questions, and I got through everything that I wanted to. So yeah, I'll be back here tomorrow after the market closes around 5:30 p.m. Eastern, and let's see what the market throws at us tomorrow. Right? Hopefully, the market just goes in one direction tomorrow. That makes it a lot easier. All right. Thank you guys for being here with me. I greatly appreciate it. And I'll see you in the next video. Good night.